Okay, so I'm going to give you a quick summary of a finance lease in the lessor's accounts. This is just an overview of the more important principles that you need to be aware of. Okay, so we're dealing here with the lessor. So this is the party giving its asset for use by the lessee, and in turn the lessee will give lease payments to the lessor. Now, when we deal with a finance lease, it means that we're saying that substantially all the risk and rewards of ownership of this asset passed to the lessee. So in essence, we don't have the asset in the records of the lessor because we have disposed of it, if we can call it like that. So we've actually sold the asset and we are just financing this transaction. So there are two components to this finance lease transaction from the perspective of the lessor. Number one, we've de-recognized the asset from the underlying asset from the lessor's financial statements. And because we're financing this transaction, so the lessee is not giving us all the cash up front. No, we are financing over a period of time. We are recognizing a receivable in our statement of financial position. Now, this receivable has a special name, and we call that the net investment in the finance lease. And this is what we will see in our statement of financial position. How do we calculate this net investment in the finance lease? Well, there's two important things that you need to look at, and that is your gross investment and your unearned finance income. Don't worry about the terms, just think about the concept here. So the gross investment in the finance lease represents all the amounts that you will receive under the lease agreement. That is your lease payments, your guaranteed residual value, and your unguaranteed residual value. Now, that is before you've discounted anything. So these are the gross amounts, okay? So the amounts that you will actually receive. Now, when you take this gross investment and you actually discount it, so you present value it, you will arrive at the net investment in the finance lease. So this is all the amounts that you will receive as the lessor discounted. What rate do you use? You use the interest rate implicit in the lease. Okay, so what is this unearned finance income then? Well, it is simply the difference between the gross and the net investment. Okay, and that makes sense. So this is the amount or the interest that we will recognize over the lease term. So it's all the accumulated interest that we've pulled into this account, unearned finance income. So this is also a statement an account in the statement of financial position, as is the gross investment. So over the lease term, what will happen here is that we will release the interest to the profit and loss every year. Okay. With the gross investment, this will also reduce with every lease payment that we receive. So at the end of the lease term, we should have a gross investment of 0 and an unearned finance income of 0. Okay, so our lease payments never actually hit our profit and loss. No, it is set off against the gross investment to reduce it. Okay, so when it comes to disclosure, how do we disclose this? Okay, number one, we need to provide a reconciliation of the net investment in the finance lease. So you're going to have the net investment in your statement of financial position, and you need to show how you arrived at that amount. So you will reconcile the opening balance to the closing balance. So you need to show any new leases that you've brought in and all the capital repayments to reconcile to a closing balance. In addition to that, you also have to show a maturity analysis, and that maturity analysis comprises of the gross investment, the lease payments that you will receive there, minus all your unearned finance income that you've released, and the impact of all of this on your net investment account. And you will do that for the remaining lease terms as at your reporting date. Also remember that finance income has to be separately disclosed in terms of IS1. So you will disclose your interest that you've received on this finance lease under finance income. And to end off, we have to ask ourselves, well, what is the tax implications? Now, remember that from a tax perspective, the asset was not de-recognized. The asset still belongs to the lessor from a tax perspective. So the lessor is able to claim allowances on the asset. Also, the lease installments are actually taxed when they are received. So that is how you will treat your finance lease from a tax perspective. And that gives you a nice short and sweet version of how to account for finance lease in the records of a lessor. Thank you.